Go here. Hello, everyone. Welcome to Now Next Later for Monday, August 11th. We dropped our background, but as you can see it from Sasha's screen, we have a cool new background because we have a sponsor today. So at the top of the show, before even introducing the guest, I will talk about CloudVirga for a second. As soon as I locate the read.
You're fine. Meanwhile, I'll do the fun visual trick, which is Now Next Later this week brought to you by.
Yeah, there you go. That is a cool visual trick. We didn't want you to see us blurring in and out of the background because we actually practiced this 2 minutes ago. So we dropped ours, but thank you, CloudVirga. CloudVirga is the architect of Tropus, the new generation loan portal that's redefining how lenders engage with borrowers. So Tropus will allow you to deliver consistent world-class borrower experience through all lending platforms, channels. It's a centralized single platform. It's going to make it easy for your borrowers to apply for financing, verify things like income and assets, upload conditions, and click through to loan closing. So thank you very much for sponsoring today's show. We'll have them coming up on a few more episodes, Sasha. And in the meantime, we have Christy with us for another episode of Christy, Sasha, and Jeremy on Now Next Later. This is a return guest, so thank you for joining us.
Fun it gets to be that we get to be here in person.
I am pumped that we're doing this in person. This is great. I think last time you were with Sasha and now you're with me. So we're keeping the theme alive. And today's theme is modernization. So Sasha, one of the things that you and I have been talking about here is we got a lot of categories of modernization we're juggling all at the same time. So credit modernization comes up when you and I talk. Technology modernization is sort of one step above that with AI and voice and sales and underwriting. I want to talk today about differentiation within that modernization space because we're seeing business models change. We're seeing channels change. And so we're going to try to implement a Now Next Later segment for modernization across those three levels. What are we seeing, across tech? Last time we had Christy here, we talked a lot about cost. I'm thinking about this as like the layer around cost. So what are you buying? What are you implementing? What kind of impacts that external cost? And then I think that's a segue to this differentiation question, which is if the layer around my cost is similar to all my competitors, then what am I doing to differentiate if we use a lot of the same systems and core partners? And then that to me segues into the later conversation of, is that telling us something larger about the future of mortgage origination relative to what type of business model is succeeding right now? So do I have to have all the channels? If I don't have all the channels and I'm competing with somebody who has a balance sheet, am I missing out on some loans from the balance sheet? So this kind of like IMB with all the channels, what banks and credit unions can do as a differentiator because they have the balance sheet. Are they using it? Are all of these things going to actually play out in the next, call it 6 to 12 months from a modernization perspective? So we'll try to do that in our 3 segments of Now Next Later today. Sasha, are you up for it?
I'm up for it. Let's do it.
I feel like having gotten up at 4 a.m., I feel like, this would be the time to be chugging a gallon of coffee if I drank coffee, because this is going to be a fast-paced, highly engaging conversation.
And as usual, please check out the chat, put your comments and questions in there. Sasha and I will watch it, and then we will ask your questions as well as our questions as we go. But since I set it all up in that fast-paced environment and we were kind of chatting about where we wanted to kick it off, this layer around internal costs that I've brought up, there are 2 or 3 things that keep coming up for me, at least in the last 6 months. VoiceAi comes up, credit scoring, credit modernization, cost of credit comes up. And the last one that's coming up a lot seems to be underwriting or verification. How do I take in data? How do I read it really fast? Some people would put AI in all of those. Some people would put AI in only the voice. So I kind of wanted to start there. What are you seeing? Let's start with some of those ancillary things that have changed since the last time. What are you seeing spending on? Are we spending on credit modernization? Are we spending on AI? What are we doing?
I think it depends on the company, right? And as you think about what's happening in the industry, by the way, sitting here at the Housing Wire AI Summit, giving a plug out for, I think, the 1,000 folks who are going to be joining us over today and tomorrow, this is a great time to talk about AI. And what does that mean? Because what we've realized as an industry overall is that there is so much cost that we have to squeeze out and wring out. That's what the consumer is demanding. They are demanding a more competitive product. If it's from the cost of credit reports, all the way down to what am I paying for a flood cert? Like when I started originating, nobody asked about what these things were. They were just something that was on it and it was just assumed they had to pay it. And today you see a lot of, in our case, members, and in your case, a borrower, talking about and saying, well, what is this? They're literally digging into every single cost. And so as an industry, we have to think about our own internal costs, what gets passed along to the consumer, to that ultimate borrower, and what it costs us to produce and manufacture that unit. So AI is not just one thing. It doesn't solve just one problem, nor can you get an AI that's going to take everything, right? You have to do multiple segments and you have to think about what you're going to tackle. And that's going to be dependent upon the regulatory conversation as well. So if you live in California, Colorado, New York, just to pick on a few of our favorite states, it looks a little different to implement AI than it does to implement it in, say, Florida, Texas, Georgia. You know, so you do have to think about, is it customer facing or is it internal? And for a lot of folks, it's a lot less risky to start with that internal. So what can I do to automate a purchase advice? What can I do to automate a task that nobody wants to actually do so that I can make my people more productive? Because as an industry, we've gone through a lot of cycles that are up and down with volume. And I don't know any single leader that looks at it and says, man, I can't wait until that next down cycle and I get to do a layoff. Right? We want to have all our employees here. So we want to figure out how to do more volume with the same number of employees that we have.
So I have a question, and this goes to this Sasha and I are always talking about juggling priorities and change management. And the thing that you made me think of, I think I'm going to ask a relatively naive question, but I want to kind of think through this, which is if I can save, let's call it for fun, between $15 and $25 on a particular vendor item, whether it's credit or whether it's flood, should I be focused on $15 to $25 per report? And or when I'm looking at tasks where I have really valuable resources like salespeople making outbound phone calls, and I can put something in that makes the outbound phone call. So I'm going back to the voice AI there. Is it worth still paying attention to the $15 if I can save my high value resources hours? And how do I think about that?
I think about that in a couple of different ways. And one is look at where you have a leakage or issues today. So is your issue, like the thing that you need to drive most, more inbound calls? If so, put your focus there. If you know that you have a lot of operational inefficiencies, and you are not getting loans, you're looking at your pull through and your pull through isn't going well, focus your resources there. Look at how you can use AI or a tech provider that maybe is not AI. We like to throw AI out as this like generic term that all tech is now AI, and that's just not true.
Right.
So where can you use other technologies or even the old-fashioned process workflows to make yourself more efficient? So first you have to assess your own problem. So I don't know what your problem is or your problem is or your problem is. You know, I know what our problem was. And ours was initially a cost to originate because our model was a little outdated. And so we had to focus on that. And we focused our AI efforts on things that were internal and picked partners that looked at that. You know, it's a popular conversation, right? The elephant in the room talking about credit modernization. MBA has come out in strong support of going down to one bureau. And I don't know if that's the right answer, right? Like, I don't know if it's not the right answer, but what I know is everything that is old is coming back and becoming new again. So for those originators that have only been in the business, and I say only 15 years, they don't remember a time where we didn't have credit scores.
Yeah.
Like it was a completely different model. And so do I think personally that credit scores are the end all be all? No. I can look at a credit report and tell you if somebody's going to pay based on how many times 30 days they are.
Yep.
And I know how to find that information because when I used to underwrite, that's how we underwrote. And so what it feels like to me is that we're looking at a lot of things that were done 25 or 30 years ago and saying, hey, maybe we threw out the baby with the bathwater when we decided there were some things that needed to be revolutionized or changed for the protection of consumers, or it made the business easier for whatever reason at that point in time. And now we're reevaluating some of those decisions as we rightfully should.
Mm-hmm.
And so we should look at everything as we peek back behind the covers and we try to deliver the next generation of mortgage to this next generation of consumers who are demanding something completely different than the lady who used to come to my office and she would put on her hat and her suit and she'd make an appointment and come in and fill out a paper application and tell me she was going to call me in 60 days to see how it was going, right? That's how the business operated when I got in. We took applications in triplicate, right? We don't talk about how long ago that was. Today's borrower expects to be able to do it from the convenience of their device.
Mm-hmm.
They expect to be able to get an answer pretty much instantaneously. But it doesn't mean that everything that was done in the early 90s was wrong.
Right.
And so I think this is our opportunity to rethink some of those old systems and processes and ways of doing business. And that could come from getting rid of credit scores to just looking at how we sell loans on the back end.
Yeah, Sasha, I think that reminded me of why I'm so interested in these topics is, one of the early mentors I had in this industry is Jim Deitch from Terra Verde. And one of the things that Jim used to say was, if I was forced, it was a thought experiment, but his thought experiment was, if I was forced to use one data field, one data point to make a loan on, if that was the only thing I knew, and we were talking in the refi context, so this will make sense in a second, but it was, have you ever been late on your housing payment? That's if I could only choose one thing that I could know, not your income, not your assets. Have you ever been late? And that 12 years ago got me obsessed with rent payments because we could see it for mortgage payments on a refi and we couldn't see it for rent payments on a purchase. So I am sensitive to like how long it takes to get certain data that is there in the real world into our system, into our ecosystem to then actually be used. And we're still not even close to there yet on that piece of data.
By the way,
but we're getting closer. Yeah.
Back in the day, we used to get rental verifications. You couldn't close a loan without it.
Yeah.
Because it mattered.
Right.
Right. It told us whether or not people were going to pay their mortgage.
It was like a hybrid in the credit and character quality of the 5 C's. You had like sort of the character credit. Yeah.
So Sasha, if you could only have one data point, what would your data point be? Purchase or refi?
Oh my gosh, don't put me on the spot with that. I mean, I do like the do you make payments late, but I'm not sure if that is the data point I would go for. I would have to sit on that and think about that for a minute. I do think it matters, but this is going to be very opinionated, but I have reasons to believe why one is never the right answer because you can't compare one data point to nothing. Like you can't compare one bureau to no other bureaus. Like there's a reason why we've had multiple options in general in our industry, whether it's vendors or credit reports or debt to income versus loan to value versus, do you make your payments on time versus et cetera, et cetera. Like we have multiple data points because I believe, and I'd have to go back and look at the research to prove it, when you have more data and you use that data in a smart way, it should give you a more holistic view. I think if I'm looking at it, I would say if what your premise is, and I wasn't in mortgage in the 90s, I was alive, I promise, 80s baby. But if what we did in the 90s wasn't necessarily wrong, and what we're doing today isn't necessarily wrong, but neither were really right, then how do we take what we already have done and just do better? And maybe we just need to go back and look at all of the data, gather the data, look at what it is telling us. And that's where one day I hope AI does really step in and help us become more predictive. I think we're very early stages with that because we have to feed the machine the data. But I believe in more data versus less. And I get your simplicity and the point that you're making. But I think for me, it's more so, how do we just go back to the facts, to the data? It doesn't lie. What is it telling us? How does it inform us? And how do we get smarter at leveraging that data to really evaluate the effectiveness of how we produce loans?
Yeah, I'm really interested in having those conversations this week with as many people as I can, because I've been kind of under the impression a lot to the point that you made about we have this pendulum that swings back and forth. And sometimes it swings over decades and sometimes it swings over shorter periods of time, like years. But the pendulum for data science swung really strong, maybe 5 to 6 years ago, everyone needed a chief data scientist. There was data science. There was kind of a gold rush on data science talent. And it seems like AI, maybe blockchain, but definitely AI have overshadowed a bit that core competency. And I think the pendulum is swinging back. It is going to be data science kind of augmented with some tools that may have embedded AI, may not, to Christy's point earlier. But to me, that is actually where we're going to see the biggest advances is, you know, I think I've said it before. I may have said it on Now Next Later, but I think propensity is going to be the word of the year from now until next time this year. If we're back at this event, August 2026, everybody will be sick of the word propensity because I think that's what we're about to spend a year talking about.
Well, it's like you've been picking my brain because it's a word that I use a lot. And when you think about credit triggers going away, a lot of the conversation has shifted to propensity modeling and saying, well, what is the likelihood that this human right here is going to take this action within this period of time? And how do you predict that? And that's not just from a lead generation, that's where the topic comes up a lot today. It is also from are they going to pay me back? Right? That's what propensity is when you look at AUS. That's what they're trying to decide when we make this credit decision. And we have to look at those external factors that are happening. And we have to think about what that looks like. So favorite word of the year right now, I would agree.
Great. We will take it. Propensity is the word of the year. You heard it here first.
Heard it here first. And scenario planning started in what, 70s? So this is just like new iteration, new evolution. There was nothing wrong with the 70s, 80s, or 90s, guys.
Right.
Exactly. And so what I said at the outset, and the reason I've been thinking so much about this is, on one hand, I'm probably, you know, too much of the Chicken Little sky is falling on this topic, but hear me out, which is I just felt like we were seeing a lot more concentration around single vendors or single platforms, meaning more and more lenders getting on the same technology, whether it's an LOS or beyond. And then as a result, to the point you just made, Sasha, we don't have as much of the competition or options or flexibility. And so it became a lot, to me at least, fear that the IMB segment of the market was going to have a really hard time identifying leads and capturing them when they're all using the exact same path to do that, or the exact same technology to do that. So I am really curious if in your year so far and kind of looking out towards MBA annual and beyond, is there anything you're seeing around ways that differentiation is kind of pushing back against this kind of consolidation around we're all getting the same leads from the same data sources on the same LOSs with the same providers in the same ecosystems? Am I Chicken Little, or is that something you worry about?
I don't worry about that because I think that there are a couple of natural differentiators. One, if you ever sit down at somebody's Encompass, right? Encompass is the #1 platform in the industry. Let's just agree on that point for today's argument, for argument's sake. So if I sit down at my instance of Encompass and Sasha's instance of Encompass and your instance of Encompass, we may be on the same platform, but they work differently, right? Because different humans have developed them and put systems and processes into place. And so even if every single IMB is on the same platform, it's going to look different and the experience is going to be different. That's first. Second, and I think this is probably the biggest key, you and I are different people. And so as a consumer, we're going to connect with the originator on the other end of the phone or in front of us very differently than somebody else, and vice versa. And so that personal experience really isn't going to go away. I have long been a bet, in favor of loan originators and the local loan originator in particular, with the caveat that they have to actually know what they're doing. Like the really good originators that know the guidelines, that know how to shepherd people through, that understand the psychology of what's happening when I pack up everything in my house, including my goldfish, and I have to move it somewhere. And what happens if it doesn't work out? Like there's a lot to that. And I don't know that we are ever going to get to the point where it's not going to matter. So I still think that there is a lot of reason to be optimistic that if you build a better mousetrap, even with the same tools, and if you ever want to try this, I've got a great icebreaker experiment for you. Go get yourself 50 straws and 6 pieces of duct tape and then give them to 5 different groups of people, the same thing, and say, build me the highest tower you can build me. Right? Super simple, cost you like $1 to buy the supplies. And then what everybody builds looks completely different, right? Like you can prove this out over and over again in a pretty easy fashion. So I'm going to double down on what, you know, my team of really smart humans is putting together.
Right on. And so, Sasha, I'll throw it back to you on this question of if you're seeing anything when you kind of move about, because I know that you talk to your clients, you talk to lenders all the time, you talk to industry groups, and you hear from your competitors, other vendors, other technology companies, kind of in the mix with those 3 categories. Are you seeing and hearing anybody do anything that we'll call it what Chrissy just says? It's really platform agnostic, right?
Yeah.
It is, hey, I have this stuff I have to do. It's this technology we all use. We make it our own, and then we go out and identify ourselves this way. I've been thinking a lot about this as, you know, AI topic of the week. But, you know, AI gives a lot of the same advice to the same users until you get it to the point where it's yours, until you've made it your instance. It's going to give you sort of that 80%, 85%, 90% answer when you want to write something clearly, right? Like PR people will tell you, write like a 4th grader. Well, if AI is giving that same advice to everybody, then it's all going to look and feel relatively the same. You're going to have to work really hard to make it your own. And what I'm hearing from Chrissy is like, it's going to be the same. It's going to be the same as old technology. You got to work really hard to make it your own and build a better mousetrap. AI, you got to work really hard to make it your own and build a better mousetrap. So we're all kind of doing what we've always done. Is that, did I kind of frame that up properly? Are you seeing something different? Are you seeing people way out in front, way behind? What's the lay of the land you've seen in the last couple of weeks as you've moved around?
Yeah, I mean, loaded baked potato on that one. But if I kind of break apart what you talked about in multiple ways, and then also I want to address something Alan mentioned in the chat. I think that, to Christy's point, everyone is just trying to build a better mousetrap. That has been this industry since day one. It will probably be this industry long after we're all gone. Because that's the name of the game, and we'd all be out of business if we figured out the right mousetrap and it was a one size fits all, which we know this industry is not a one size fits all across anything. We can all pretend all day long that a conventional loan is vanilla. It's not. No one loan is the same. No one mortgage company is the same. No one vendor is the same, right? There is a reason, back to my, you know, kind of thesis on us having multiple data. There's a reason why so many different permutations exist. Within my loaded baked potato answer. I love that you put that into the chat. I do think what you're seeing is different lenders take on different approaches to the mousetrap to figure out what does work for them and continuing to evolve. And I think what we've talked about before is, if you need to be playing offense, and that means stop worrying about your competition and what they're doing, figure out what works for you and for your borrowers and for your business model. Because if you're busy looking behind you at your competitor, you've already lost. So you have to look at your own data. Something that Alan brought up is propensity and regression analysis, kind of the same thing. I would argue that they're complementary, meaning that regression analysis is what feeds into the outcome of the propensity model. And to what you mentioned around AI, and if you're just feeding the same data in, you're going to get the same data out. Well, that's why you should be focused on your mousetrap, your business model, your tools. Yes, like be platform agnostic. I think that is the way to go. I think as vendors, we need to offer more ability for lenders to choose what makes the most sense for them. And that's not just the technology offering, it's how they implement the technology offering. Now, everyone out there who's ever been a tech vendor is going to say, Sasha, if you say the word customization, I'm going to smack you, because we don't want to customize 1,000 things for 1,000 lenders. But we should be able to configure things for 1,000 lenders 1,000 ways. There should be flexibility in our models the same way that you as a lender should have flexibility in yours. So all in all, big baked potato answer. I think that different people are approaching it different ways. You've got the Rocket Loan Depots of the world. They're going to do it one way. You've got UFCU, who's going to do it another. Annie Mac, you heard Craig last week say, I got to focus on doing what I do best. I originate loans. That's what I do. I will surround myself with the right fintech partners to help me fill in the gaps. You've got other organizations out there that are going to be more tech forward and build the tech themselves, like the Rockets of the world. It doesn't matter what you choose. What matters is, does it work for you and your model and your business?
So today's episode is all about food.
Yes, it is.
Because we have the loaded baked potato, and then back earlier in the comments, Jake was talking about my protein powder.
Yes.
What you didn't know, Jake, is that on my last call, we had this discussion of protein powder because I have a new one and it's really great. If anybody cares, it's Deion Sanders
There you go.
protein powder. It's
Yes.
amazing. So if you're interested, we can drop that in the chat, but it matters, right? Like these things matter. The other thing I thought was really interesting, Sasha, is what you said about looking at your competitor. And there's a story that Simon Sinek tells about how he got the latest gadget. I can't remember what the gadget was. It's really kind of irrelevant. And he got in the car with a leader from Apple. And he was like, hey, do you want to see this gadget? And they're like, no. Like, I only care what I'm doing.
Yeah.
And if I got that story wrong, it's something like that, like who
Makes sense.
technology, but you get the idea. They didn't care what their competitor was doing. And that is the point that Sasha made. And I think that is really, really true. I do care about benchmarking because I want to know if I'm way off somewhere, but I don't care about the specifics of what they're doing because I know I am focused on where we are. And I am focused on the work that I do with you and the work that I do with Sasha and the work that I do with, 5 other very select people, because it will look different because it comes out of our team's brain.
Yeah, this theme has come up enough this year, Sasha, that, this self-awareness, like reflection that lenders need to do to be able to find the right partners, identify the change management champion, and then execute on that. It really has me thinking a lot about, I remember when Dave Stevens rebranded the Mortgage Bankers Association around mortgage bankers, capital M, capital B, and then the association was like the little a. And I understood that to be like mortgage is mortgage is mortgage. And I think that's still true. But what it's sounding to me like is what we're evolving from is not what type of business model you have from a wholesale, retail, IMB, credit union, bank perspective. It's this other thing that Sasha's talking about. How do I reach my consumer? Who's my consumer?
Right.
And now my business model is not around like how my loans get funded or who I sell them to. My business model is now around how do I really identify the persona that my people are best at winning and then go win them. And that's the type of mortgage company I am. And this other thing is almost a distraction to some degree.
Well, this other thing is your back end. And it looks different being at a federally chartered credit union than it does being at a state chartered one, than it does being at an IMB, right? Those are just constructs that we have to work within. They all have their benefits and their detractions. And there is no one perfect model. If there was, we'd all be on it, right? This is a group of really smart industry people. We would all, if there was one magic answer, we would have found the holy grail by now. And we haven't. That's because everything has its pros and cons and different people are attracted to different things. So what let's Maria Kondo this. What brings you joy? And how is serving the person or the persona that you're serving served by the company that you're at? Like that's what's going to make you happy ultimately.
Yeah, right on.
I think the question in the chat from Jake around should lenders be focused on hiring LOs versus product engineers, so to speak. I think you said developers maybe. Again, goes back to depends on what your model is, right? And depends on what your consumer needs. How digital of an experience are they requiring? A lender working with members is going to have a very different experience, to your point, Christy, than an IMB like Rocket, who might be getting to some of the younger next gen buyers that do want just quick, get me in, get me out, get me my loan. And so depending on the experience that you offer, your advantage, your value add, which, when we're talking about a commodity, is really hard to do. We all struggle with how do we add value in a differentiated way in this industry. I think that answer comes down to depends on what your customers need.
And it probably makes a lot of sense for our tech company listeners too, Sasha, to say the same thing, right? If this is true for your lenders, it's true when lenders turn to you and ask, are you the right fit for me? I'm working with more and more partners or hearing from more and more partners that are actually telling lenders, I'm not the right partner for you. And I don't think that was true early on in my career. Maybe just because I was in a different position, but maybe not. Maybe it's actually a trend we're seeing where people are getting, I think, more comfortable and confident to say, I don't think we should work together, instead of just trying to say yes to everything all the time.
I think you're exactly right, though. I think it is new. It was not something that occurred in the past. I think that propensity to want to serve everybody, back to our favorite word of
Yes,
the year, gotta work it
is.
in.
We have to.
That favorite word of the year, the propensity was to tell people what they wanted to hear so they'd
Right.
sign the
Just
contract.
do
And
it.
that's where you got the term vaporware or promiseware. And now people are realizing that that's not a great business model. It doesn't create good long-term value and good long-term partnerships. And so they're more willing to step up and say, hey, this doesn't look like it's a good fit right now.
Mhm.
Maybe in the future, if I build trust with you, we could be better partners. We could do something different. And I think that same thing goes back to loan officers, that as a loan officer, you don't serve everybody, that you're happy to do so, right? Like you will serve whatever customer walks in your door because that is lending compliance and nobody is not compliant in our industry.
Right.
At least most people that I've ever met.
That's right.
But you may have a niche or a specialty that you are particularly good at, and that is what you go out and talk about. And that is the tribe you are trying to attract,
Mhm.
not because you're trying to repel somebody else, but this is where you focused and where you studied and where you're the best in the world. And then again, you'll serve anybody that walks in the door, but this is your niche.
Mhm.
And so you may tell some realtor partners or builder partners or borrowers that they would be better served with somebody else. And that is okay.
Yeah. Well, thank you, Christy, for joining us. Thank you, Sasha, for the great conversation. Thank you, everyone, for tuning in and listening. We always try to stay true to our 30 minutes here, but we always want to talk more. So we're going to have Christy back so that we can talk more about these. Thank you. Everyone will be posting this to YouTube so you can share it if you heard something you want your team to know about or get more viewers for next time. Thank you to our sponsor, CloudVirga, and the Tropus platform. We'll be talking more about that. We have the lender perspective today. We're going to have the tech vendor platform perspective next week with Jessica Evatt, the SVP of product strategy at CloudVirga. So we are going to keep this conversation rolling throughout the rest of the summer. Can't wait to spend the day with you tomorrow.
Can't wait.
Sasha, great to see you, and we'll see you soon.
Yeah, have fun at Housing Wire AI, guys.
Take
We'll
care,
miss ya.
everybody. Bye.
Bye.